Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome, ladies and gentlemen. Welcome to Nirmal Bangan, Hilal Dadia. We have with us Riya Singh, technical analyst, Currencies joining in. Welcome to the show, Riya. My first question coming to you is what's happening with regards to the dollar index? Clearly, it's losing gains, and this is probably in anticipation of a possible stimulus measure that could be announced as well. Uh, Clearly, help us understand what's the sense you pick up and what direction are you seeing in levels for the dollar index?
Hello, Hiran. So, yes, if you look at the overall, dollar index momentum from past 2 weeks, I think it has been quite, sideways actually, because it has been under pressure with respect to not only the ongoing, US election statements that have been coming forward from both the candidates, but also, the sentiment shifting towards winning of the increasing probability of Biden winning. So this is actually coming into the play as far as the dollar index is concerned. Obviously, there is a decision that is pending on 1.8 trillion proposal that has been put forth. Uh, with respect to the fiscal measures, I think if that comes in, the proposal does gets accepted in the house and there is an infusion of this 1.8 trillion, though it is not as expected, but still 1.8 trillion will definitely play into the weakness of the dollar index going forward. I think this has also been reflected in the first half of today's trading session, where we did see rupee kind of again testing the lows of 73.30 around, and the bullions getting the gains. So, but obviously, the as far as this decision does not comes in, the volatility will continue into the dollar index. But obviously, Fed is putting his foot forward and is requesting more stimulus, buying corporate bonds quite aggressively. So I think going forward, dollar index will get highly accustomed to the news that will come forward with respect to the US elections, as well as on the pending fiscal measure. I think the market is quite looking forward onto what the fiscal measures will come forward as a first indication onto where the dollar index will be headed. Because as far as the economy number goes of the US, the deficit has been on a record high. The US is facing around 3.1 trillion budget deficit this year. Uh, so I think the only weakness that can come forward if there is an infusion of the uh, infusion of the fiscal measures. Otherwise, the overall economic stand of the US still looks bleak with respect to the numbers that it has posted, whether it's US budget deficit or the the unemployment numbers. So I think we can definitely see uh, dollar index to be in the range of 93, can test 93 to 94.50. I think at least for a coming few sessions, I think it will trade into these ranges.
Right. And with this, what's the kind of impact, Ria, you're expecting on the Indian rupee? Because that's something which becomes utmost important right now.
Right. So, see, Indian rupee actually is quite into, facing quite indecisiveness sentiment, because there are so many factors that is right now playing for the Indian rupee, whether it's domestic factor, whether it's the US front, the RBI did come in, lending a hand with respect to, the uplifting the banking sector. So obviously banking sector does play a role into the rupee also. So that did help on that day. But as far as the momentum that we are witnessing from past few sessions, I think it is still very indecisiveness. These as to where the momentum will head, because obviously the pressure is building from the US front. with respect to the factors that we just discussed. And if you look at the overall, the economic front of the country itself, obviously the borrowing cost did decline for the, RBI did help uh, for the borrowing cost with respect to the government to get it lower. It is also helping the state government, which is quite a good, quite surprising actually. And the accommodative that stance that it has built up with respect to pushing the economy to get into the track is quite applaudable actually.
Mm.
So get it, especially helping with the state government. So RBI is trying right now to get the economy back in track so that the inflation can get it under control. There is some clarity on the rupee that can, that can come forth. But overall, looking at the borrowing cost that the government will bear, the overall GST compensation that, the GST shortfall that it has been witnessing, which is around 1.1 trillion rupees. So I think it is quite bleak if you we are not especially I'm not expecting rupee to get appreciated too much, even if there is fiscal measures that can happen into the dollar index, and it dollar index does fall. So even in that anticipation, I'm not seeing rupee to get appreciated much. I think the max level that it can test on the downside is 73, 72, 80. I'm not seeing it getting appreciated further than that by taking into consideration the overall numbers that the economy is posting. So I think even if it does happen, it can only go forward till 73, 72, 80, at least on a shorter term.
Right, so that's with regards to where the Indian rupee goes. Now, on the back of the volatility that we've seen with regards to Brexit decision, COVID-19 infections are on a rise with regards to Europe, and they have been looking at partial or probably full lockdowns in some places as well. And you have the US elections, which has been lined up in the month of November. What is the sense that you pick up with regards to the pound as well as the euro?
As far as pound goes, pound will remain very volatile. Let's just be clear, it will be very volatile with respect to the, at least till November mid. So you can see pound to trade continuously in green and red zone simultaneously. So I think as far as pound goes, because though it is not only facing its decisions with respect to the Brexit, they are not able to come into a common ground yet, which is a very disappointing front, because this thing has been going on from past 4 years. And the overall the trader mentality that gets it, they start then weighting down as to what is important. Such a long term for a Brexit to get hold is something, was something that has really disappointed the market. And even if the statement that is coming from the UK Prime Minister, that it did say on Friday that if this doesn't happen, they'll walk out from the deal. With no deal, they'll just walk out. I think this will be a very harmful decision that can happen for pound. So I think with respect to that, then there is also a talks of implementing negative rate cuts that that the government is discussing along with the central bank, because obviously UK is into a quite depressing economic front right now. The numbers have been quite on the rise, and like you said, the lockdown measures that have come forth will definitely wipe out the gains, whatever the economic gains that it did see in the initial phase of when the economy did start to reopen. So I think pound will remain extremely under stress going forward, and it will be very volatile. So it will probably trade with the intraday lookout rather than a positional lookout, as far as pound and euro goes, because even on the euro front there has been talks that they will not pull out the stimulus. The ECB will not pull out the stimulus so soon, and it has been recommending the same to the respective country central bank. But obviously there is how much far they can expand their balance sheet. That is a question that needs to be asked, because if you look at the various central bank, they have been doing so from now since March, this at the commence of this pandemic. So how much risk that they can take on their balance sheet as well. Yes, the priority is to get the economy back on track, but the, there there has to be some limit put forth on the expansion of the balance sheet as well, because then the debt risk will start to arise in the coming front. So I think all these factors will definitely weigh high onto the euro and pound trading session, and this can continue till mid November.
Right, so that's something which we will continue to watch out for as well. Overall, with regards to where Japan goes, now clearly you have the Bank of Japan meet as well that is expected on the 20th and the 29th of September. Sorry, this was on the 20th, I think September or October.
October,
October.
it will be coming
It'll
forward.
be correct. It'll
Yeah.
be coming forward. So, what's the kind of impact you're seeing on the yen and any moves that have already started to happen?
See, as far as yen goes now, talking about the Japanese economy, it has been quite weak, and we all know the kind of inflation that the economy faces, as well as the kind of demographic that it has right now. So it especially among during this time where the economy has taken a hit, there has been again a rise in the inflation, and there is the pickup has been quite slow. We do need the countries the strength of the yen to be weak in order to get at least the boost from the exports. But if you look at the overall momentum, there has been a 3% appreciation that has happened against the dollar for the Japanese yen, and this is not something that is playing for Japanese yen right now. So I think with respect to the policy need, uh, I uh, I think we are mostly expecting the rate to be unchanged. There will be a more the stance will continue to be accommodative, and the only thing that we need to look forward is what kind of credit policies that the bank will come forward, that the central bank will come forward with, and what are the various policy that it will introduce in order to get the market stabilized there. So these two, the credit policy, the credit and the stability policy is something that I'm looking forward for the Bank of Japan. As far as rate goes, I think it will remain unchanged.
Right, so that's with regards to where the yen is concerned. And what are the strategies that you would want to recommend?
Yes. So I think as far as dollar index, obviously look out for dollar index today, the news that is pending for the fiscal measure. If it did come and there is a overnight depreciation into the dollar index, we can definitely see appreciation into the rupee towards 73.25, 73.15. Today it has closed on a greener note, but if there is a such fall that you see, I think buy on the dip should be the strategy for the rupee if it did gets appreciated in the tomorrow's opening session. So tomorrow's opening session, if rupee opens anywhere around 73.28, 73.25, uh, obviously it is it is quite circumstantial with respect to what the measures, if the fiscal measure does come in. But otherwise, if it does come in and rupee does open on a week, on a higher around 73.28, 73.20, you can definitely buy into the rupee. But if that doesn't happen and there is a breakout of 73.55 on the higher side, you can again go into you can go into a sell position. So play within a bandwidth, because if you look at the overall momentum for the current week, 73.65, 73.25 has the band that it has been maintained. So play within, if it does open around 73.65, go for a short. If it opens around 73.28, go for a buy. This is the only safest play that you can do right now into the rupee. The volatility has shot down quite, the volatility into the rupee is not much. So play along this band for a safer side. As far as yen, pound goes, I think you can definitely buy into the pound around 94, 95 levels, 95 levels or above 95.25 on a safer side for a target of 95.50, 95.65. Uh, uh, there is a positivity that can come forth in euro as well in an intraday session. So definitely go for a buy into euro as well. Just a second. So this is the second session that the euro has, closed in a green and in a higher highs above the trading, moving averages of short term and mid term. So I think any open or a support around 86, 65. So catch 86.65 as a support for a buy towards 87, 87, 87.16 for the coming session. So you can keep 86.65 as a stop loss for the buy in into the for going long into the euro INR. So buy anywhere around 86.85 for a target of 87, 87.16 with the stop loss of around 86.65. So you can definitely go long into the euro as well as into the pound. Play along the band as far as rupee goes.
Right. So those are the strategies that we should be watching out for. Thank you, Riya, so much for joining in. And thank you for sharing those strategies. And thank you, participants, as well.